Have you ever stopped to wonder who truly decides how much money exists in the world? It's not your government, and it's not even the president. Behind the scenes, there's a single institution quietly pulling the strings of the global financial system: the Federal Reserve. Known simply as the Fed, it's the central bank of the United States. But make no mistake, its influence extends far beyond American borders. What the Fed does affects the stock markets of Asia, the value of currencies in Europe, and the cost of goods across Africa and South America. Its decisions shape how the world earns, spends, borrows, and saves. In many ways, the Federal Reserve doesn't just control money, it controls the rhythm of the global economy itself. So how does this powerful institution work? And why does it have such enormous influence over the world's wealth? Let's start with the Fed's most well-known tool: interest rates. Every time you hear that the Fed raised or lowered rates, what it's really doing is adjusting the cost of borrowing money. When the Fed lowers rates, banks can lend more cheaply. Businesses take out loans to expand. People buy cars, homes, and invest more. The economy heats up, spending increases, and growth accelerates. But when inflation begins to rise, when money loses its value and prices spiral upward, the Fed raises interest rates to cool things down. Borrowing becomes expensive, spending slows, and inflation begins to fall. It's a delicate balance. Raise rates too much and the economy crashes. Keep them too low, and inflation destroys purchasing power. The Fed's challenge is to find the perfect middle ground: enough growth to create jobs, but not so much that prices spin out of control. But managing interest rates is only part of the story. The Fed also controls the money supply, the total amount of money circulating in the economy. And it can change that money supply without printing a single dollar. Here's how. The Fed buys or sells U.S. government bonds in what's called open market operations. When it buys bonds, it pumps money into banks, giving them more funds to lend. This increases the money supply, encouraging spending and investment. When it sells bonds, it does the opposite, pulling money out of circulation to slow things down. These transactions happen quietly, electronically, and often overnight. Yet, their effects are enormous, influencing interest rates, stock prices, and even how confident people feel about the economy. But the Fed's role doesn't stop there. It's also the guardian of the banking system. It supervises and regulates commercial banks to make sure they stay solvent and operate safely. This is crucial because when banks fail, public trust collapses, and without trust, money itself loses meaning. That's why during times of crisis, like in 2008, the Fed steps in as a lender of last resort. It provides emergency loans to banks, restores liquidity, and prevents financial panic from spreading. The pandemic of 2020 gave us another example. As markets crashed and uncertainty grew, the Fed flooded the system with liquidity, slashed interest rates, and stabilized global finance. Within weeks, it had injected trillions of dollars into the economy, showing just how powerful its tools are. But with great power comes great responsibility. Because every move the Fed makes, every percentage change or bond purchase affects not just America but the entire planet. Here's why. The US dollar isn't just America's currency, it's the world's reserve currency. Global trade, oil, technology, and even gold are priced in dollars. So when the Fed adjusts rates or money supply, it changes the value of the dollar worldwide. A stronger dollar means other currencies weaken, making imports cheaper for Americans but more expensive for everyone else. Developing countries with dollar-denominated debt suddenly face higher payments. Global investors move their money in and out of markets, chasing stability. In other words, a decision made in Washington can raise or crash markets in Tokyo, London, or Sao Paulo overnight. Let's bring this down to a personal level. Imagine you're planning to buy a house. When the Fed lowers interest rates, your mortgage becomes cheaper. More people buy homes, construction increases, and the economy grows. But if the Fed raises rates to fight inflation, borrowing becomes costly. Home prices may fall, and people delay big purchases. You might not even realize it, but those changes started in a boardroom at the Federal Reserve. And the Fed's influence extends beyond the economy. It also affects psychology. When investors believe the Fed will support markets, confidence rises. When the Fed signals tightening, fear spreads and stocks fall. This is sometimes called the Fed effect, the invisible emotional control it has over the world's largest financial systems. Over the years, the Federal Reserve has faced enormous tests. The Great Depression, the oil shocks of the 1970s, the 2008 housing collapse, and the pandemic-driven market meltdown of 2020. In each case, its decisions shaped not only America's recovery, but the world's financial landscape for decades. Critics argue the Fed's power is too concentrated, that unelected officials have too much control over global wealth. Supporters say without the Fed, financial chaos would destroy economies. Whichever side you stand on, one truth remains. The Federal Reserve is the heartbeat of modern money. Its actions ripple through interest rates, currencies, commodities, and capital flows. From your bank account to billion-dollar hedge funds, everything responds to its moves. And that's why understanding how the Fed works isn't just for economists. It's for anyone who wants to make smarter financial decisions. So the next time you hear that the Federal Reserve raised rates by 0.5%, don't ignore it. That small number might change your job prospects, your mortgage, or the value of your savings. Because in today's world, financial power isn't about who prints money. It's about who controls its movement. The Fed doesn't just influence money, it defines it. It manages trust, stability, and the heartbeat of the global economy. And for better or worse, that makes it one of the most powerful institutions on Earth. If you found this breakdown insightful, stay tuned right here on Wealth Lens, where we uncover the systems, strategies, and stories that shape global finance. Because understanding money isn't just about numbers. It's about understanding the forces that shape the world we live in.